Welcome to Share Talk, the only podcast where investors come first.
Joining us is Brian Larkin, CEO of United Oil Gas, which aims to build a portfolio of production, development and low-risk exploration assets. Good day, Brian. How are you?
Not too bad, thank you. And yourself?
Not too bad, thanks. Let's talk about the Rockhopper Egypt acquisition for my first question. You described this as transformational. Why is that?
Well, it's transformational for quite a few reasons. Predominantly, it fulfills our objective of building a full oil and gas lifecycle company by adding production via this acquisition. So it's significant production with material upside for us to get after. And we're already seeing some of the results of that upside via the Ashwell well result, which has delivered a significant increase in production of nearly 800 barrels a day to us. In addition to that, we've exciting drill program ahead of us throughout 2020, currently drilling an infill well. We've 3 more wells to drill this year. And in addition to that, we secured financing for the acquisition from BP, which I think really sets us apart, having BP as part of this transaction on the funding side. So from all of those reasons, we do believe it's a transformational deal for our shareholders. It's significant production, and it has significant upside, and it has some blue chip partners.
You mentioned BP there, so not many junior oil and gas companies can lay claim to having them as a funding partner. How did this come about, and what are the terms?
Yeah, well, I guess it's a very good question. When we set out at the beginning of last year with the idea or the goal of acquiring a production asset, we said that we would finance it alternatively. We didn't want to do an all-equity deal. A transaction of this size, however, is traditionally too small for the banks. So we had to think differently, and we had a conversation with BP, and they felt that there was potentially a derivative angle to funding this transaction. And they had a look at it, and they liked it, and they got behind the deal, and they got behind the management team. So it is quite unique to have BP as a funding partner. But I think really the reason they're in supporting us is because of the quality of the management team and the quality of the assets. And in addition to that, as a management team, we have proof of execution that we can go and execute deals. We can also sell assets, create value that way. But also we've got proof of ability to finance. And I think in these difficult markets, having proof that you can finance is attractive to people like BP who want to finance acquisitions, and they want to deploy their balance sheet. So from that perspective, it should be a win-win.
Great. And do you think you can provide details of the ongoing drilling program that's underway at Abu Sennan, and what the results are to date, and what's planned for 2020?
I can. We obviously drilled the Ashwell, and we announced that result beginning of this year. At that stage, it was still Rockhopper's asset, but it's now our asset, and that was a hugely successful drill. Currently drilling a development well, which is essentially an infill well. That's spudded on the 3rd of February. And we look forward to updating the market on that result in due course. Following on after that well, we'll drill another development well or infill well, and that'll be sometime in Q2, probably falling to Q3. And as we come into Q3, we would look to spud another exploration well, followed by another water injector well towards the back end of this year. So there'll be no shortage of news flow across the existing assets. We're quite excited about it, but it's not the only assets we've got. We've also got assets in Italy, which we'll look to put into production before the end of this year. We've also got some exploration development projects in the North Sea. We see them as near-term value triggers from potentially farm down divestments. So from across the entire portfolio, we see 2020 has been quite a busy year for us with plenty of news flow.
Okay, and a question we always like to ask is, are you looking at any other deals?
We're always looking. We always have an eye on potential new ventures. But having just completed quite transformational deal, our focus for 2020 will really be developing the assets that we've got. There's a number of reasons why we want to focus on our existing asset base, predominantly because there's so much untapped, unlocked value that we need to go and realise now. And secondly, the financing market really isn't there just now to be in acquisition mode. So we really need to develop our existing assets, create as much value as we can from them. and then maybe perhaps looking at another acquisition, but that's not really in the forefront of our minds. Focus, as I said, is really just developing the existing asset base. However, should a no-brainer come along that we think will create value from our shareholders that won't, require equity, we'd certainly be stupid not to look at that. But the reality is our focus needs to be developing the existing assets, particularly in the current climate.
Last question then, Brian. Do you think you can give us just a bit more of an update of what's happening in Italy?
Sure. Well, we're on course for first production in Q4 this year. That's still our target. We're currently producing 1,700 barrels of oil from Egypt, in addition to Italy. If you also include the monetization of the gas, which we should have on stream shortly, that will push our daily production close to 2,000 barrels, add in Italy on top, and that should push our production in excess of 2,000 barrels of oil a day. So if you look at the market cap of United, we're arguably a value play as well as a growth play.
Great. Well, it's been good talking to you, Brian, and we look forward to further updates in the future.
My pleasure.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.